Great. Good afternoon, everyone. Looks like there's only standing room left. So really nice to have everybody in this room and such good energy after lunch. Please don't fall asleep. I don't think you can fall asleep with such a topic. So I've got we really have some great experts to chat to us this afternoon. So we've got Nolwazi, who is a fintech specialist at the FISCA, Linestri, who is country head for Visa, and Lauren, who's the head of payments legal at the First Rand Group. So really top quality. So I'll just start with a bit of a positioning kind of perspective. I think we all know that AI has been around for a hell of a long time. In fact, it was coined in 1956 as a technology and a start. But I suppose everything changed on the 30th of November 2022 when ChatGPT was launched into the market, and the hype really started. The fastest growing technology ever seen to man. It basically put AI into the consumer space, and people could use it and understand it, and it wasn't just the domain of some techies in the back room. And I guess what really started happening is people started realizing that this is an unbelievable technology. And the investment has been eye-watering since then. I mean, we all saw the deal just recently, where 100 billion has been put into OpenAI, just as a top-up of all the investment that's gone in there already. All that investment is actually driving the buzz. And saying this is beyond the buzz, I think we're still very much in the buzz. But it's all around the expectation that humanity is going to change and that we're going to be fundamentally more productive as societies. And that's all on the bet that we actually put this to practical use. So I guess that's what this conversation is about this afternoon, and specifically around the payments environment. Are we putting it to practical use, and maybe uncover some of those? So I'm going to start off with you, Nolwazi. You've prepared some really good slides for us just to kind of, I suppose, set this out. They're insightful, just a very, very high level of how impactful it's going to be, where it's being used, and what are the kind of fundamental risks at a kind of macro level. So maybe hand over to you.
Thank you so much, Richard. Yes, my slides are up. So at the FSCA, we conducted a market study together with the Prudential Authority. We surveyed the whole financial sector, including payments institutions, to understand their usage of AI, investment levels, ethical considerations, accountability structures, amongst other things. We also posed questions around what are you looking for from the regulator in response to AI in the financial sector, and specifically in payments. So I'd like to share some of those insights with you today, where the first thing you see is that investment levels within payments and AI are quite varied. You can see that some institutions, or the majority of institutions, are at a lower level, but significantly higher than the overall financial sector in South Africa. And the key use cases, as you can see from the two graphs there, are fraud detection and risk management, identity verification and compliance, as well as customer engagement and support, for that example, through the use of chatbots to engage with consumers. That's traditional AI. And then on generative AI, we see that they offer personalized customer interactions, as well as virtual assistants and conversational interfaces, and productivity and operational efficiency. And these are the use cases we see as being prominent within the payment sector. So AI is not without its risks. We all can be in the buzz, as Richard said, thinking about this is the best thing, the next best thing, but we also need to be cautious of their approach with the use of AI in payments. So you can see on the screen displayed some of the risks and how we've ranked them from the payment sector and how they view these risks within the economy. I think I'll end there, and then we can continue with our discussion.
Thanks, Nolwazi. And it's fascinating to see, actually, in our environment, that the investments in AI are actually still quite muted. We're still constrained by budgets, I guess. Which doesn't seem to be the case in the US if you're working for NVIDIA or one of those. So maybe let's start with you, Linestri, and thinking about, I think Nolwazi's kind of framed a lot of opportunity there. But if we go specific around payments and the massive amount of opportunity that I think a lot of us in this room may be thinking about, how would you categorize the main opportunities for applying AI to payments as a whole? And what do you think the impact may look like on users, payments, and the man in the street?
Sure. So good afternoon, and thank you for having me here today. So I agree. There's been significant, I would say, change when it comes to the payments environment. You know, we've seen real growth when it comes to real-time payments. We've seen a surge of embedded finance. We've seen the start of generative AI, and now we're actually moving into agentic commerce. So the pace has, really been quite quick. And not just accelerated, really it's multiplied. So when we look at companies and how you need to stay competitive as well as how you need to remain relevant, we really think that you really need to relook at your technology architecture and really move to AI-first types of systems so that you're enabled to scale quickly, you're enabled to get products, etc., out to the consumers quickly, and also you're able to cater for personalization that consumers are demanding today. So when we look at the opportunity that AI brings, I think I'll talk to it across three key themes, and very much, linked to what you've put on the slides now as well. So the first one is on risk and security. That one is quite key. I think we all agree that we see digital payments scaling and scaling rapidly. But with that, there's also threat that opens up in the ecosystem from a fraud perspective. If you look at AI, it's embedded across the payment lifecycle or across the transaction. And companies have the ability to both detect and stop that fraudulent transaction real time. From a Visa perspective, we've invested $12 billion over the last 5 years by leveraging AI into the risks and the actual tools that we're building. We process over 260 billion transactions globally annually, and the AI analyzes 500 plus attributes per second of the transactions going through the ecosystem. So you're able to stop them real time. I think another thing we've done is we've actually acquired a new company called FeatureSpace. FeatureSpace is an AI native cloud-based solution, and it comes out of Cambridge in the UK. One of the key components of FeatureSpace is that it uses adaptive behavioral analytics together with real-time machine learning, and it's able to detect even the smallest anomalies in consumer behavior across multiple channels. So so risk and fraud absolutely is the first opportunity. When we look at the second one, it's on personalization and user experience. So as I mentioned upfront, consumers are really demanding a lot more instant, a lot more in-the-moment experiences. And we've certainly now seen the rise of agentic commerce. So agentic commerce is really a new paradigm where AI agent actually acts on behalf of you. So very different to e-commerce and your traditional chatbots, which actually give you recommendations. This goes over and above. So it takes the instruction, it actually analyzes the choices, and it completes the payment for you, all within whatever rules and boundaries and budgets, etc. you set. What I mean by this at a more practical level is, say I want to book a hotel stay in Cape Town, in a hotel close to the beach for not more than 6,000 per night. You can tell your AI agent this, and it goes and it searches, it finds the options, it checks against the boundaries that you've set, it makes the booking, and you're done. And this is the type of world we're going into. But that doesn't come without us needing to ensure that there's trust in the ecosystem. Because if there isn't that trust, people are not going to be using those AI. So we recently launched this week, so very opportune for this session. It's called the Trusted Agent Protocol that really assists both the consumer and the merchants to ensure that they're operating in a framework that is able to detect, one, that the AI agent is actually an AI agent, that you can verify its intent, the credential of it, and then, before you make payment. And then the last one is you're able to determine, is this AI agent actually legitimate, or is it something that is fraudulent and trying to do transactions? So that's the one implication of using these AI agents to act on your behalf. And then the third one is around modernization and scalability of your technology architecture. You have to be able to move towards more AI driven systems, towards more like cloud-based systems as well, that give you the scalability and flexibility you need to incorporate, whether it's different APIs from AI agents, etc., that you're using. And maybe I'll finish off with the point of, when you're looking at AI, it's not only about how you facilitate the payment and the consumer experience. I think one of the very big use cases for AI comes in, how do you enable financial inclusion? And you can do that by providing access to, mobile apps as well as chatbots to reach into the most rural areas and provide financial education, etc. And then use AI to analyze alternative data sources so that you can establish creditworthiness to for banks or fintechs to afford loans.
I must admit, it's a few years ago, I think we would have thought all of this was sci-fi. And we're kind of getting into a different place. And maybe just staying with you, Laneshri, I mean, given the possibilities, and I guess we're still at very early stages of really driving the AI journey. I think most of us might have been using machine learning in the background for a couple of specific applications, but it has opened up dramatically. Do you see business models fundamentally changing? And do you think new businesses will be emerging out of the AI revolution?
Yeah, absolutely. I think one of the key things, and I've just mentioned it now, is agentic commerce. Where the future of payments is agentic commerce, and at the base of that sits a key component of trust. So these AI agents are they're going to be acting on behalf of you. I think we've seen some stats in the last week where in the last year, AI-driven traffic onto US-based sites increased something like 4,700%. And it's moving quickly into other regions as well. I also have to mention, it is an ecosystem play. So, it's coming together with companies like ChatGPT, OpenAI, Perplexity, etc. And when you have an agent that is acting on your behalf, then the business model does change. And the protocols and the frameworks do have to come into play, and that's also what I've mentioned in terms of the Trustic Agentic platform that we've launched. I think the second thing that we've seen is, if you look at this continent, SMEs are really the lifeblood of this continent. And a lot of them struggle with a multitude of challenges. But when we look at research, we see when you integrate AI into your business, you're able to use AI, whether it's for business insights in terms of how you manage your supply and demand, you're using it to automate things like your back office operations. It gives you a lot more, I would say, flexibility to thrive in the environment, and it also allows you to play on a more sort of level playing field. And then the last one, I think, when it comes to AI is absolutely financial inclusion. And there it's also a shift in terms of how you have to service the customer and how you have to reach the customer. And AI gives you also the unique ability to think about our environment, to do this in different languages.
Yeah, I guess we're still scratching on the possibilities which are ahead of us. Lauren, it come to you, and I think Laneshri has touched on a little bit of the risk environment, but you being in legal and all of that type of thing. If you kind of think about the key risks of AI, and Nolwazi actually gave us a quick look at a whole list of those type of things out there. And both from an application perspective, but also from an attack perspective. What would you consider the main ones are, and how do you think payment service providers need to think about protecting themselves and their customers?
Thanks, Richard. From a legal perspective, I'll be honest, AI, it's both very exciting, but frankly also a little bit daunting. On the one hand, AI brings this promise of greater efficiency and innovation, but it presents with a lot of regulatory challenges that are still evolving, in some cases still being defined. So let's start with the application side. One of the big worries is bias. If your AI is fed flawed or incomplete data during training, you can end up with systems that make biased decisions, rejecting legitimate transactions or misclassifying customers. And that's not just a hit on your reputation. It has serious legal implications under anti-discrimination and consumer protection laws. Another major concern is explainability. Black box AI models, so think deep learning algorithms, are powerful, but they don't always tell us why they made a particular decision. And as lawyers, we're not fans of surprises, unless they come gift-wrapped with a big indemnity clause. So, unlike transparent white box models, black box systems process information in such complex ways that even the experts sometimes struggle to trace how a particular output was reached. Now, that's a problem, especially in regulated industries like payments, where legal and compliance teams have to explain why certain decisions, like transaction approvals or credit scores, were made. Regulators are increasingly expecting transparency. They expect explanations that a human can actually understand, not something that requires a PhD in machine learning. For instance, new frameworks like the EU's AI Act and recent changes to the US banking regulations are starting to require explainability and audit trails for AI-driven decisions. So organizations now have to invest in models that are interpretable and make sure that their documentation is robust. Switching to the attack perspective, AI systems are vulnerable to manipulation. This is where attackers deliberately feed data designed to trick the model into making a wrong call. So imagine fraudsters teaching your fraud detection program system to look the other way while they help themselves to your money. We're also seeing AI being used to automate phishing, social engineering, synthetic identity fraud at scale. And these aren't hypothetical threats. They're happening right now. There's also the legal side of handling internal data and proprietary information in AI projects. Contracts need to be explicit about data usage, anonymization, retention, auditability. If you don't get this right, you risk breaching confidentiality, facing regulatory penalties, or suffering reputational damage. In short, embracing AI in payments means staying ahead of the game. As the technology is moving ahead, your legal, ethical, consumer protection approaches need to advance as well.
Thanks, Lauren. I'll take a deep breath. Going into that level of worry. Nolwazi, a regulator's perspective. You've obviously got multiple interests at heart. And you recognize the need to protect society from the dark side of AI, in payments specifically, whilst promoting inclusive growth. I think we've heard a lot about inclusive growth. With all the risks and uncertainties surrounding AI, as well as it still being considered a maturing technology, how do you think about the frameworks that you need to put in place to protect the users of payments, whilst not stifling the exceptional innovation opportunities that do exist?
Thank you, Richard. So this is a significant challenge that we are facing as we ourselves are starting our own AI journey. Having conducted the survey that I shared the results from, we're still working with the Prudential Authority to think of our next step in terms of what regulatory or policy proposals we might have for industry so that we can consult with industry. And so one of the things that we've learned in terms of trying to balance innovation and regulation is that even from industry, they see that that's the intention of the regulator. And from some of the responses, they even called for certain governance frameworks to be in place, data requirement or data governance frameworks to be in place, and asking for clarity from the regulator. So we're still working through our way, but one thing that we're sure about is that we function on a principles-based, risk proportionate approach. So high impact use cases will be put at the level of risk that they need to be and given the appropriate level of regulation and supervision. So in the core principles of us thinking about how to design these frameworks, you need to think about the first thing, which is we want consumer trust, because consumer trust is the bedrock of the financial system. So our regulations or frameworks need to encourage trust within the payment system. We need to ensure that there's safety and resilience within the payment system, and we know that there's the cyber resilience standard, joint standard by the PA and the FSCA that's in place for that, and that's a framework, that existing frameworks that can support the regulation of AI in the financial system. And I like that Lauren touched on explainable AI, because in the survey, one thing that was quite alarming was you'd find a good 20% of a particular sector doesn't use any form of explainability method. And that is quite worrying, because industry and people in general need to be able to ask, why was my loan denied? Why is my premium so high? Why didn't I get the loan, sorry. So that's one thing that we flagged, and that's one thing is of interest to us as well as the regulators, that there needs to be a use of explainable AI, and also fairness by design, to ensure what Lauren spoke about bias being used in the AI systems. So I think overall, with our existing frameworks, we would be able to adjust them to AI, but what we want to do next is conduct a regulatory gap analysis to understand where the regulations lack in terms of covering risks that emanate from AI. So we'll be looking at the conduct standard, we'll be looking at the upcoming joint governance standard by the FSCA and the PA to inform what our next steps will be within our AI journey. Thank you.
Thank you. And please keep questions coming. I see they're starting to flood in, make our panelists quite nervous. Maybe, Nwazi, I'll stick with you for a second, and just talking about, the complexity which we're dealing with. Lauren spoke about the black box sort of nature of some of the AI models which are underlying. Given that complexity, how are regulators going to think about approving models?
So this touches on model risk management.
Yeah.
So I think at this stage, we're still, as I said, thinking about this, but from my own understanding of how black box model work, I think the approval for models would need to go through an auditing process as well as a validation process to ensure that the results are accurate. So what we normally do, I'm taking a course in fintech at UCT, so we have some machine learning subjects. What we normally do is then run the test data on the initial model to ensure that we're getting expected results. So I'd see that being applied here, but then in the black box models, it's not so easy to see why this logic came to be. And that is very important for us. And so under model risk management, we think that to manage that risk, you'd need to enhance 3 areas that I have in my notes here, which is rigorous, enhanced validation. So one thing I learned at the SME Global Forum hosted earlier this year was that, yes, we all talk about human in the loop and human oversight, but the best way to do this is to rather have AI-assisted human oversight. So that way you can ensure that even risks that a human would miss are found and can be handled appropriately. There also need to be specific measures developing customer metrics and to control Gen AI risks such as hallucinations, and continuous monitoring, because as we know, there's model drift, and models need to be calibrated to ensure that they still give the good output. So another thing we'd want to focus on is data governance and bias mitigation, as we're intensely focused on the quality and the ethical consideration of vast data sets and ethical use. And the last thing we'd want to establish is clear accountability. This is something that the OECD AI principles also speak to, that the system needs to have clear accountability so that it can be trusted by consumers. Thank you.
Thanks. Lauren, I'm going to come back to you, and I think the risk issues around AI are starting to come out quite strongly, but obviously in the payments world we are terrified of fraud. And it's likely that bad actors are going to be using AI as well. And they're going to impersonate people, they're going to attempt large-scale attacks. They're trying to decode algorithms, make people look the other way, or models look the other way. Can you maybe expand on a few of those and just suggest some ways of thinking about managing those risks?
So AI impersonation is no longer a theoretical concern. It's an active threat that's already targeted organizations and governments, agencies globally. So we're seeing deepfakes, voice cloning, generative phishing campaigns used to impersonate executives, customers, even regulators.
Yeah.
We're seeing synthetic identities that are so convincing, even your compliance teams would invite them to lunch.
Have you
Last-
met our compliance team?
Last year in Hong Kong, an employee was tricked into transferring $25 million to criminals who were pretending to be the CFO in a group video conference call. So they impersonated a whole group of people in a boardroom, which he fell for. So, and for legal reasons, the name of that company has not been shared, but it is in the news. You can look it up. From a legal standpoint, this raises serious concerns of identity theft, data protection, liability. If your system fails to detect deepfakes and fraudulent transactions go through, who's accountable? Spoiler alert, it's not the AI.
Yeah.
So, how do we manage these risks? How do providers protect themselves and their customers in this brave new world? The answer, I think, lies in a multi-layered, proactive approach. We need robust authentication mechanisms. Think biometrics, behavioral analytics, device intelligence, to make it increasingly difficult for the imposters to gain access. Second, let's use AI not as a tool for innovation, but also as a shield. By deploying AI defensively, we can detect unusual patterns in voice, video, transaction data, flagging potential fraud before it spirals out of control. But that's not enough. Providers also have to maintain strong KYC and AML controls, incorporating liveness detection, comprehensive document verification, this was mentioned. And finally, we need agile, real-time response teams, experts who can act swiftly when the threats emerge and who are routinely testing our defenses against the latest AI-driven attacks. Relying on untested scenarios won't cut it. Proactive testing, continuous improvements is the only way forward. Because let's be honest, hope isn't a compliance strategy.
Thank you. And it's really great to see a lawyer thinking innovatively.
So,
I'm pulling your leg, Lauren. We'll probably get to some questions from the audience now, but maybe just finish off on one business issue, Laneshri. Cross-border payments are difficult from our geography. Tons of legislations, tons of regulations that we've got to comply with. How do you see AI helping us to reduce the complexity and cost for customers and service providers in this space?
Sure. Before I answer that, can I respond to what Lauren was saying in terms of hope is not enough? But my risk colleague from Visa always says, the tools we use for innovation and to drive personalization and differentiation, all these good things we talk about are the exact same tools that the fraudsters are using to get into the system. So I absolutely agree with you in terms of how you stay ahead, in terms of real-time detection, and really using advanced behavioral analytics together with real-time machine learning models in order to combat that. But let's come back to cross-border. And as you know, on our continent, cross-border is actually quite critical for us. When we look at trade, we look at travel, both across the continent as well as out. And remittances on our continent are also huge. But the challenges that come with that is that it's often slowed down. There's multiple intermediaries involved in the process. Then you have currency conversion, layering, and then, of course, to your point, Richard, there's a lot of regulation that comes with it. So I'll speak about a few ways in which we're looking at AI to look at cross-border and reducing the complexity as well as the costs of it. So the first one is with cross-border, we see a lot of attempts from a fraud perspective, especially when it comes to card-not-present fraud. Especially in our country, we've seen over the last year an absolute spike when it comes to card-not-present fraud. So we use real-time fraud detection tools to actually spot and stop the transactions. And a lot of these transactions are also peer-to-peer. If you look at remittances or even small businesses buying things, cross-border. So we want to put tools in place that actually help you manage the fraud, both on the receiving and the sending end of the transaction as well. So the first part of it is to have real-time fraud detection tools, and we're leveraging AI heavily into that. I think the second one talks to a point that you made in terms of driving compliance. And we see AI playing quite a big role there in terms of doing things like AML, KYC screening, as well as sanction screening, and really making it less manual and more into automated decisioning. And then I think the other one I want to talk about is we've recently, as a company, started looking at settlement in stablecoin. And we've been piloting in the US. When you look at our region, we're actually looking in the Central Eastern Europe and Middle East. We're partnering with a company called Yellow Card to look at how do we look at leveraging their technology, the blockchain technology that they have to make settlements faster, to make it cheaper 24/7, and also to intelligently route these cross-border transactions. So I think those are just some of the ways we're looking at it. And I think one of the other key things you can look at is we talk about AI-powered models and AI-powered systems, but really what you want to now look at is moving into AI-native type of applications.
Thank you, Vaneshri. And opening up the stablecoin conversation could take us the whole rest of the conference. I'm going to go to some of the questions from the audience, and maybe Nolwazi, this is probably for you, but I'm sure anyone can have a go at this. Do you think AI can be used to assist fintechs with regulatory compliance in terms of reducing the regulatory burden?
Definitely. I mean, AI is being used for supervisory technology, so SupTech as well, to enhance the supervisory function, and therefore it can be used in RegTech to enhance the compliance function. There's many options for this to happen through the use of, instead of having a person manually validate data or manually go through transactions to find the fraudulent ones, AI can enhance that or even enhance suspicious transaction reporting on behalf of the client in terms of, but we'll still need some human oversight as expected. So I definitely do see AI in RegTech as an innovative technology that will make the space faster and hopefully cheaper, as compliance costs are very high. Thank you.
Thanks. Lauren, maybe move to you. So what do you think the AI ethics principles should be taken into account before implementing AI? And is the AI strategy report required, or would we rather start with implementation first? Not sure if I fully understand that.
Myself included.
Or maybe start with the first part of it.
So I think your AI is only as good as how it's trained.
Yeah.
And it's important to ensure that when you are training your AI and the data that you're inputting is ethical. So we spoke about explainability models, we spoke about the various logic behind it, and you need to get that right. Leading into the second question, I think you can't build that post facto. Ethics needs to be embedded from the start.
Can I add to that?
Sure.
So in our discussion, in our survey to the payment segment, we saw four main themes arising from the ethical considerations question, where they were namely accuracy and reliability, accountability, transparency, as you mentioned, and data privacy. So, think about those and embedding them from the very beginning, implementing principles like privacy by design will be important to have a fair system by design for consumers.
Can I jump in there? I'm so glad someone mentioned the elephants in the server room. It's the data.
Yeah.
Because we already seeing a shift towards more stringent controls around data, and particularly given how critical data is in training your AI, especially your large language models.
Mm-hmm.
Now, the importance of safeguarding that data and that sensitive information has never been higher. You don't know where it's going to be used, how it's going to be used, and we need to make sure that it's properly managed. Otherwise, you're just creating additional opportunities and paths for privacy breaches, data leakage, and even regulatory non-compliance.
Yeah, can I just, to add to that, because with the risks being highlighted is data privacy. And I think that's a big challenge because we still need to coordinate with the information regulator on POPIA. But data privacy was listed as a significant risk, as well as a significant regulatory barrier. But I'm not sure why it's seen as that, because it's there to protect the consumers and make sure that the ecosystem is trustworthy. But just to the point that in terms of the data, another thing that's important about the data is consent. In the sense that does the consumer understand what their data is being used for, even though they consent to it being used for AI models? So there's another dimension there that you're looking at under data privacy, in the sense that is my data being used for intended purpose only, or is it leaking now to other areas because the AI can trace back components that are not so obvious, like race or gender, through other elements like your zip code or your postal code or your salary or your company that you work. So we need to be careful there as well under the data privacy considerations.
And it sparks the thought, Lauren, maybe, or Nolwazi, do you see much more stringent frameworks, things like PCI DSS being applied and certification applied across all payment streams going forward?
Given this landscape, I think it's very likely that frameworks like PCI DSS, which have traditionally been limited to cardholder data, will be extended, or at the very least, the principles will be more widely adopted across payments environments. The underlying logic, I imagine, is that if you protect payment data in one area, why not apply the same rigorous standards everywhere that sensitive payment data is being processed, stored, or transmitted? That being said, any expansion of these frameworks must be purposefully designed and still meet the objective without introducing unnecessary layers that drive up cost or complexity without delivering clear value.
I just want to add to that. I think in the payments world, even though AI is, we're moving into agentic commerce, tokenization for us is the absolute foundation and it's key. So what tokenization does is it decrypts all the sensitive data that is associated with that particular PAN number on a card. So even if it is intercepted, that it is not worth anything. And then I think the second thing is, the people that are building these data models and all of these risk and fraud tools, you need to be able to ensure that the data is restricted, that access is always controlled into who is using it and what they're using it for. And I think those things become very important from a company perspective in terms of the policies you put together. Like data minimization is absolutely quite key here.
Couldn't agree more. I apologize, but I'm getting the sign from Willie over here. So maybe just to thank the three of you for such great insights into what's a very brave new world. Thank you.